Introduction to Banking: Retail, Corporate, and Investment. Hi, my name is Christopher. Welcome to this journey through modern banking innovations. Today we are going to study the chapter Digital Banking and FinTech. In this chapter, we'll explore how banking services have evolved with digital technologies, what FinTech means, and how these advancements are changing the way customers interact with banks. We'll see examples of digital platforms, payment solutions, AI applications, and new security methods. By the end, you will understand how digital banking and fintech are reshaping the future of the financial industry. What is digital banking? Digital banking means offering traditional banking services through digital platforms, removing the need to visit physical branches. It includes account management, fund transfers, bill payments, loan applications, and investment services, all done electronically. It began with simple ATMs and has evolved into full mobile and internet banking platforms. Customers can now perform almost all banking activities digitally. This transformation has made banking more accessible, faster, and available 24/7. Mobile and internet banking. Internet banking is accessed via web browsers on computers or mobile devices, offering comprehensive services and detailed account information. Mobile banking uses dedicated smartphone or tablet apps optimized for touch interfaces and smaller screens. Mobile apps often add features like biometric login and may allow some offline capabilities. Both have greatly reduced the need to visit branches. Together, they have transformed customer interaction with banks by making services available anytime, anywhere. UPI and digital wallets. Unified Payment Interface, UPI, allows instant interbank transfers through mobile apps, linking multiple accounts to one app and using virtual payment addresses. It operates 24/7 with minimal costs and is widely used in India through apps like Google Pay, PhonePe, and BHIM. Digital wallets store payment details and funds, enabling contactless payments and sometimes offering rewards. They can be linked to bank accounts or loaded directly with money. Examples include Paytm, Amazon Pay, and Apple Pay. And blockchain and banking. Blockchain is a distributed ledger that stores transactions across multiple computers, ensuring transparency, security, and immutability. In cross-border payments, it speeds up transfers and lowers costs. Smart contracts can automate tasks like loan disbursement and insurance claims. It can also create secure digital identities for KYC processes and improve transparency in trade finance. While still developing, blockchain has the potential to significantly reduce banking infrastructure costs. Artificial intelligence in banking. AI powers chatbots and virtual assistants that answer customer queries, provide account details, and perform basic transactions round the clock. It improves risk assessment by analyzing large datasets for creditworthiness, fraud detection, and investment risk. AI also enables personalization by recommending products and advice based on customer behavior. These technologies cut operational costs and improve decision-making. AI is becoming a critical part of banking operations. Cybersecurity in financial services. Key threats in digital banking include phishing, malware, data breaches, DDoS attacks, identity theft, and account takeovers. Protection methods include multi-factor authentication, encryption, real-time fraud detection, security audits, and customer education. As digital adoption grows, cybersecurity is now a top priority for banks. Many institutions spend 10 to 15% of their IT budget on security. Strong protection measures maintain customer trust and safeguard financial systems. Fintech partnerships. Banks are partnering with fintech companies to improve digital services and speed up innovation. Partnerships can involve investment, alliances, or white-label solutions. Fintechs bring user-friendly interfaces and specialized tools that improve customer experience. They also help banks reduce costs and automate processes. Examples include collaborations with payment processors, lending platforms, and wealth management apps. Case study: DBS Bank's digital transformation. DBS Bank in Singapore began its digital transformation in 2014, investing over $1 billion in digital initiatives. It rebuilt its core banking systems, adopted a cloud-first and mobile-first approach, and used agile development. It created innovation labs and partnerships to support new ideas. Results included multiple World's Best Digital Bank awards, a lower cost-to-income ratio, more digital customers, and the launch of Digibank in India. The lesson is that cultural change and leadership are as important as technology. Case study: HDFC Bank's digital journey. From 2014 to 2015, HDFC launched a mobile app and a 10-second personal loan approval process. In 2016-2017, it introduced an AI chatbot, Eva, and cardless cash withdrawals at ATMs. By 2018-2019, it had set up a digital innovation lab and partnered with fintechs. Between 2020 and 2022, it accelerated digital adoption during the pandemic, achieving 95% digital transactions and launching video KYC. These steps helped maintain its position as India's largest private bank while cutting costs. The future of digital banking. Future trends include advanced AI for predictive financial advice and autonomous processes, voice banking through smart assistants, and banking as a service, BaaS, integrating banking into non-financial apps. Biometric security will expand to behavioral and continuous authentication. The line between banks and tech companies will blur. Banking will become more integrated into everyday digital life. Digital banking adoption challenges. Customers face challenges like low digital literacy, security fears, and preference for human interaction. Banks face outdated legacy systems, complex regulations, and resistance to change in organizational culture. These barriers slow digital adoption. Overcoming them requires investment, training, and cultural adaptation. Addressing these challenges is crucial for successful digital transformation. Digital banking in India. Current landscape. India's digital banking is growing rapidly due to government initiatives, smartphone adoption, and UPI. Traditional banks offer basic digital services, while digital-first institutions and fintech platforms provide advanced features. Neobanks combine banking with cutting-edge fintech integration. The COVID-19 pandemic boosted mobile banking transactions by over 200% between 2019 and 2021. India is now one of the world's fastest-growing digital banking markets. Key takeaways. First, digital transformation is essential for banks to remain competitive. Second, collaboration between banks and fintechs often delivers better results than working alone. Third, innovation must be balanced with strong cybersecurity. Finally, a customer-centric approach focusing on solving real problems is key to success. These lessons apply to both established banks and new players. Discussion questions. How will digital banking change in the next 5 years, and what new technologies might appear? What could be the social impacts of increasing digitization, especially for underserved groups? How can traditional banks compete with fintech startups and tech giants? What should be the role of regulation in digital banking? How will the balance between branches and digital channels shift? Thinking about these questions will help you critically engage with the topic. Thank you. This brings us to the end of our chapter on digital banking and fintech. We covered definitions, technologies, case studies, future trends, challenges, and the current Indian landscape. Remember, digital banking is not just about technology. It's about creating better, faster, and safer experiences for customers. Thank you for being part of this learning session. I'm happy to take your questions.